everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures markets. For this case, we're going to be looking at the big six like we always do, which is going to be the bund, gold, the bonds, crude, NASDAQ, and the S&P 500 for trading on tomorrow's price action for the 16th. Now, if you were maybe under a rock today, or maybe you took the day off, today was a big moving day of FOMC news, FOMC statements, rate hike decisions, all kinds of fun stuff going on in a phenomenal day of price action. We got the markets moving. Yes, finally, right? So overall, there's a lot of stuff that we're going to have to digest, especially with the rate hikes and all the FOMC stuff. And that may cause the market to go a little bit sideways going into the end of the week. There's a lot of information that they're going to have to sift through. A lot of the traders sitting at home are going to have to sift through that information as well. And that may mean that we see a little bit of a slowdown for tomorrow's price action. Now, before we jump on in, make sure to swing on over to the website, scroll down, and click on the Join the Daily Outlook newsletter, and that will add you to our email list so that you never miss when these come out. We talk about all kinds of different stuff, not only this video, of course, but also different stocks that we're looking at, different statistics on the day, all kinds of different stuff. So a great newsletter to have your hands on. And then at the bottom of the page, we have our latest blog posts. Every single day, we do a market psychology video, which goes over the psychology behind the moves so we can better trade the next day. And then we also have our morning major levels that we're looking for in terms of support and resistance. If you haven't done so already, make sure to swing on over and join the one-day trial for the live trade room. And if you really like it, you can subscribe to it. And there's also membership, of course, as well. So let's jump on in here. Looking at the bund, we have some pretty good movement, right? I mean, bulls really didn't let off the gas pedal in beautiful pullbacks the entire way up. Whenever you have a day like this that just doesn't stop going over and over and over and over and over again, well, the buyers are going to have to take profit at some point, right? So with the buyers kind of leading off the gas pedal a little bit towards the end of the day, this is likely due to profit taking. The buyers see this big, huge rally to the upside with no follow through, and they begin to exit a little more aggressively than they have been doing before, because we have at least been breaking above the highs and continuing. This time around, though, big breakout move and then nothing. Now notice the time, that's also FOMC. So there's going to be a lot of liquidation. Buyers are going to be taking their contracts off the table and potentially scaling out. As the market pulled back, it made another new high, but weak once again, only barely was able to stay above it before finding a double top and pushing back down. And likely that's where the buyers finally called it quits, and then we're leading into a big pullback. Now, the overall momentum here that we're looking for in the bund is we don't want to buy high, and that's obvious because nobody else did either. Otherwise, we wouldn't have this huge pullback. We're looking to buy low. And right now, we are in a very nice pullback zone between 160.20 down to 160.11, and we may be able to get a little bit further. This is a decent amount of bearish pressure, so I sure wouldn't want to be stepping in front of the bus right now. But if we can start seeing a little bit of faltering, right? See the sellers fail to get underneath that low, or if they do get lower, see them get stuck around those prior lows where we also found a high. Get around that area, bounce around a little while, and then, if that failure persists, look for the move back to the upside. So we're in an area of interest for buyers, but there's a lot of bear pressure. I would rather sit on the sidelines for now and see if the buyers want to show up to the party. Over on gold, obviously the market loved this run higher, right? The FOMC news caused a gargantuan spike to the upside from the lows at 2 o'clock, right? As soon as that hit, we had a spike of 146 ticks. That's 14 points on the S&P. On the gold. So with such a massive rally to the upside, we expect that if there were buyers in there, they're going to be taking profit. And if there were sellers in there, they're really hating life right now. So what do we have? Well, we have a scenario where we're expecting a pullback. We get a pullback, very short-lived, only one candle before firing off right back up towards the highs. And we see good strength on that move, right? Good breakout, staying above it, pulled back and use that area as support. Again, off to the races. Pulling back now, see if they want to hold this as support as well. The one key thing here, though, is that we are forming a wedge on the top and it's running out of time. And what I mean by that is the end of the wedge, not too far away anymore, right? We only have maybe 5 or 6 candles before we run out of room for this wedge to complete. A lot of times when that happens, wedges generally break out about 65 to 70% into its completion. And what I would like to see is a pullback. I don't want to buy this far up. It's way, way too high. So we need a better price. In this case, a better price, I would love to see the market come back to where they found a peak on the highs. They retested it as support between that 14.9 and 14.6. That is the first key area of interest. The next key area of interest is after that big FOMC spike, where did the buyers stop taking profit and where did they resume buying? Between 10.2 and 9.7. So that's where we want to be looking to buy as well. If we can get a dip down into this area here, I wouldn't mind buying, and if it goes further, looking to buy more for that rally back to attempt the highs once again. So all hands on deck to the buy side, we just got to buy a pullback. A little too far up right now. Over on the bonds, very good bullish momentum to the upside. Multi-tiered channel working its way higher and seeing both sides respect very well. We started off with this nice little channel here, got a little wider on the FOMC news, and then popped higher into a deviated channel, forming that earlier top is now the midline, and we're looking to hold this right now. The one thing that really stands out here on the bonds is the fact that this was such an aggressive rally higher, but as soon as they made it to a new high, didn't really do so well, right? So chances are we're going to find buyers here off of midline support, and they're going to take an attempt at the highs again. I'm anticipating selling above this high. I don't think that the buyers are going to stick around for very long above those highs because they're just out of gas. There's no more gas in the tank. So arguably there will be scale-in sellers above looking to sell that high and get a pullback. And that's really what we're waiting for. Selling above the highs, looking for a pullback, buying short term for not big moves, just back to the highs. What I would really like to see, though, is a nice dip down into that 148.02 down to 147.28 area. And if they really want to pull back all the way down to 147.19, as low as 147.16, that area is going to be a nice potential buy location. So looking for the buyers to get a little more of a pullback than this little tiddly one that we're getting here. But in the short term, we may find some buying pressure back up to a new high before finding sellers up there at the highs to push back. Over on crude oil, a little bit more range bound. Now, crude oil remains kind of unaffected by FOMC. I can't say unaffected, but not as affected as some of the other markets. The big one for today was obviously inventories, today being Wednesday. Now, the inventory shook the market around all over the place, but really only created a big range. We don't have much else to work with, and the range highs and the range lows kind of disallowing any kind of movement. We're breaking above it, we're holding the pullback and trying to go back higher, but there's really no reason for me to believe these buyers want to continue for much more than maybe a small little new high above 49.04, or maybe a head fake where they get a big breakout and then completely collapse back down. At the moment, though, I just don't believe the buyers. They are fairly strong, they're breaking above the range, they're holding the pullback, so I think the buyers have a good argument down here up to a new high. And that's what a lot of the buyers are going to be looking for, is that new high. So looking to retest the highs and looking for sellers above those highs to get a better pullback. The area of interest for me, a retest of 48.77 seems to be about the top of the range, as low as maybe 48.68 with all of the back and forth inside of there. That area is where I would love to be a buyer again to see if we can get it going, but if that side fails, we may find that to be an area of support turned resistance for the range right back down to the lows. So we got to play it a little bit safe here. And again, we are getting that pullback. The buyers have a good argument. We're nearing the highs at 49.04. I anticipate a decent amount of sellers above, maybe again on a head fake before seeing some failure. On the NASDAQ, pretty bullish movement on the NASDAQ as well. Good, strong momentum to the upside in another multi-tiered channel. We have bull movement here. We split it up, broke out higher on FOMC, and formed a new channel that actually is much larger. You have the very large channel here where we started on the original one right there, and we're finding a little bit of midline support. Now, we do have some upside objectives that remain unfinished. They almost got them on that peak up there, but they just missed it. 5433, right? That big purple line up there. 5433 even up at the highs is where we're looking for the buyers to come in and drive the market back up to finish the job. Now, the overall upside, it's the same story that we've seen and talked about in all of the other ones. We have a very big rally. It's fundamentally driven on the FOMC report. I don't want to buy the highs. I want to buy a pullback. I'm looking for a pullback between 54.09 half down to 54.06 half in that area to become a buyer to continue that drive back up and finish that job off. Now, we are finding a little bit of midline support. We may find buyers here depending on how long we stick around. It may just chop through it and then dip down into the lows. But if we find some nice bouncing up here, we could get a short-term bounce right back up to the highs to finish off that 54.33 as well. So we want to be a buyer, but we need it on a pullback. On the S&P, also very bullish, and also with unfinished business. Now, this one's a little bit more overdone, right? The NASDAQ wasn't so overdone. They stayed inside the realm of the channel. They didn't really deviate outside of it a whole lot. It looked pretty good. In this case, though, the S&P got a little too aggressive. We had that original channel here. They broke out. They held it. Looked like we were going to have another multi-tiered channel. But then they slammed above that one as well. And that's a very unsustainable type of move. So even though we have big objectives up here at 23.88.5, it might be another week before we get up there, because what we're anticipating is the fact that, well, we have a big breakout to the upside atop the channel, and it's not sustaining itself. So if that's the case, we're expecting a bigger pullback to the bottom of the channel to potentially break the lows before going back up to finish that job. Either way, same story. We need to buy in a pullback. 23.79 even is the first area of interest, and then lower at 23.76 half down to 23.75 and a quarter. And those are the big hot spots that I'm looking for buying pressure to shove the market right back up towards the top. So that's going to be the overview. And again, in terms of the news tomorrow, there's obviously not as big of news as there was today, but we do still have some news tomorrow. Out of the 8:30 news, we have the building permits forecasted at 1.26 million. Previous was 1.285 million. We also have the Philly Fed tomorrow at 8:30, and then we're going on to the JOLTS job opening at 10 o'clock, but relatively light on the docket compared to today. And I think a lot of traders may use tomorrow as an excuse to show up a little bit late to the party, sleep in a little bit, right? Let the profits that they made today kind of pad their pillows while they sleep, because, well, chances are it's going to be a little bit slow tomorrow. So as always, play it safe, and like we always say, make a plan, trade a plan, follow those rules, and you'll be a-okay. Until tomorrow, we'll see y'all then.